When someone says to me, I don't want to sell my house even though I absolutely hate it because I have a low rate, you're foolish.
So the key to housing is to understand that the cost of owning it really is about interest rates and mortgage rates. And the problem, which is kind of unique to our situation now and really causing pain, is if you have a 3.5% mortgage, the average on that mortgage is still another 3.5 to 4 years. So if you have that, you're never going to flip that house to one where it's 7.5%, regardless of what you think about the house. It's too expensive to make that move. And if you did, you'd lose about 25% of the floor space.
I just spoke to a client who's trying to get pre-approved and has maybe $40,000 left on her mortgage on her house. And she's looking to sell her house and buy something considerably more expensive but larger. Okay. She could afford the payment for the newer home. But when I started talking through things and giving her numbers and said, okay, this is the principal and interest, this is the taxes, this is the insurance, her payment was tripling from what she has now. This is a woman who's, I think in her 50s, so she's not super elderly. She's older, but she wants something bigger, right? And she's willing to sell. She was blown away by the numbers, right? And it's not necessarily just the interest rate on the mortgage. It's also the taxes on the larger home that they may have not prepared for. So what Mr. Wonderful here is saying is the higher interest rates don't help, because if you're in a home and you're comfortable and you've been in that home for several years and then you see, either taxes going up or an interest rate going up leading to a higher principal and interest payment, that's going to be an issue. Now, on the opposite side of the spectrum, if you're renting, like I see a lot of videos saying that you should rent. Well, guess what? Those folks who own the rentals, if they're financing that home and they happen to refinance for some reason or buy while rates are higher, that's going to lead to higher rent amounts as well, right? They're going to charge you more. They're not going to pay a $4,000 mortgage and rent their house to you for $2,000 as a charity. It's just not going to happen, right? They're not going to lose money. So what's going to happen is that they're going to have higher payments themselves and pass that on to renters. So it goes back to the age-old question: does it make sense to own or rent, right? If you're living on your own. I think the issue that Mr. Wonderful is bringing up is the inventory, and the slow increase of inventory is what's causing real estate to be so darn expensive. Darn it.
It's a problem caused by this rate increase in a very, very, very short period of time. Now, one way to solve it would be the Fed would also reduce rates at a very quick rate. Remember, just a year ago, we talked about 7 rate cuts. That never happened, not even one. And so really, we're stuck in the overall policy situation of simply printing too much money.
So the printing of money happened during COVID, right? The Biden administration came in, started printing money, giving stimulus checks, caused inflation to go up because people were spending, and everything kind of went through the roof. The first 2 years of COVID, from 2020 to 2022, housing rates were extremely low, but the market was so competitive because everyone was trying to snag this lower rate either by refinancing, which backed up mortgage lenders, right? Or by selling and buying and trying to lock in that lower rate for their dream home. Well, now look at what happened starting in 2023, right? Rates go up. The inventory is stagnant. Now people who had the lower rates, even though they may hate their home, they hate it every day, they dread the home, they don't want to get rid of it because either A, they can't afford the higher interest rate, or B, they just financially and mentally don't want to deal with a higher rate. I have clients that are like, I hate my home, but I have a 3.5% rate. Life is short, right? If you absolutely hate your home, so I moved, I gave up a 2.625% rate, and I have a 6.75% rate after buying my house last year. I needed to upgrade my home. I needed to. For my own happiness, for the size of my family, the growth of my family, I needed to upgrade my home. So when someone says to me, I don't want to sell my house even though I absolutely hate it because I have a low rate, you're foolish. You're waiting, and what's going to happen is home values are going to go up, and the amount of money that you would have saved if you bought at a lower price has been washed away just because you got a lower rate. It makes no sense, right? Waiting never makes sense, especially in real estate. But Mr. Wonderful brings up a valid point. When inflation is curbed, which I think is going to happen usually a year after a presidential election, we see inflation get curbed. So within a year or two after that presidential election, I'm hoping rates decrease. Are they going to go down to the 3s? Probably not. We're probably going to be in the 4s. And it may take, once again, about 2 years from where we are now. We're in December 2024. But I think by the end of 2026, we should see a really nice trough in rates, allowing buyers to snag something a little more reasonable. But where are home values going to be at that point? The next time someone tells you, a political party tells you, we're going to give you free money, we're going to give you a stimulus check, make sure you really pay attention to what that stimulus check is going to do. Because even though they gave you $1,000, you're now spending double on eggs, double on milk, double on everything. So that $1,000 is really only worth $500, right? And towards your housing payment, it's even worth less.